Hello everyone. So at this stage, we are going to now plug in the income statement and balance sheet data to our base scenario Excel sheet. So let us start. So now, your first step should be to highlight the financial accounts you are going to just import to your base scenario Excel page. To do so, you can see here, I highlight with yellow color. You can choose whatever color you want. And one of the benefits of highlighting here is if you do any mistake, you can easily identify the accounts you want to check. You don't need to go over all the accounts you can see in the Morningstar income statement data you collected, or balance sheet data you collected, or cash flow statement data you collected. So here is the case. I need total revenue. Okay, before we start, let me just explain the format of the Morningstar income statement. So you can see here, in the very first item, they calculate their gross profit. Now, in the second row, they just put a space in front of the total revenue. So you can see here, gross profit is little bit to the left side, and then total revenue is a little bit to the right side. So that means total revenue is a sub account of the gross profit. So they used total revenue to calculate gross profit. Now, these gross profits include total revenue, cost of revenue. You can see they both have the same space from the left, and then we need both of them. We don't need their sub items like business revenue or cost of goods and services. So I highlight them. Also, I need operating income and expenses, which comes from selling, general and administrative expenses, R&D expenses. And then I also need interest expense and interest income, which you can see is a sub item of the net interest income and expenses. I need provision for income tax. At the same time, I need depreciation expenses, and I get depreciation expenses from the statement of cash flows. And here you can see depreciation, amortization, depletion, non-cash adjustment. Okay, so once you find out the items you want, just go back to your base scenario page and then link them. So here you can see, say for example, I want to link revenues. So I put like equal, then I go back to IS Excel sheet, choose the Excel cell I want to import. Then here everything is in dollar term. I want it to be in million. See, the same way, cost of revenue, go back to cost of revenue, drag all the way down. So this is how you get gross profit. Then operating expenses, the same way, I import it from from the income statement data. And then because I copied operating income and expenses, I already covered the sub items of operating income and expenses. Next, and then I'm going to calculate this operating profit and loss. That should be the difference between gross profit and then operating income, expenses, and depreciation, right? And then in the next step, I want to cover this non-operating income and expenses, but I want to specifically find out the contents under this net non-operating income and expenses. So here, if you check the base case scenario, I want to know interest expense, interest income, and other income or expenses. So here you can see the this particular one. It includes total net finance income and expenses, I want to go down a little bit further to check its sub items. So its sub item includes net interest income or expenses. I want to go a little bit deeper to find out interest income and expenses. Now you can see the sub item of net interest income and expenses cover interest expense and then interest income. Now, as long as you cover these two, you actually cover this one. And then as long as you cover this one, you actually cover total net finance income and expenses. So now you know I already cover total net finance income and expenses. The next one I want to cover right under non-operating income and expenses. If you see, if you just go down, you can see we have another account with the same distance from the left side. It's other income and expenses, non-operating. So I want to know also this particular one. So I highlighted that. So let us now import these three accounts to our income statement. And that is exactly what I did here. Interest expense, interest income, and other income and expenses, right? Next one, provision for tax. So provision for tax, it is very easy. Now you can see our next item is pre-tax income, which we are going to calculate. And this is the difference between operating profit and then all of these non-operating income and expenses. So we get this part, right? Now we covered all of them. Next, provision for income tax. So provision for income tax is provided here. So we are going to copy it to our income statement template. Then we are going to get net income from continuing operation. We are going to calculate that. And then our number should exactly match the number we have here. So you can see here, our net income is the difference between earnings before tax and provision for tax. And then say for the year 2017, our net income is 48,351 million. Let us compare it with the data we have in the IS tab. That is exactly we have here, right? So that means our calculation so far is right. We included all the income statement items up to net income from continuing operation. The next information I need here is diluted weighted average shares outstanding. And then you can see I highlighted that one, and we are going to just copy it to our base scenario page. All right. Next, I need my regular dividend amount, and I get this regular dividend amount from the cash flow statement. And then we report it under financing activities. So here, you can see here cash dividend paid. So I also need this account, right? So we are going to copy it to our income statement, again, convert it into million. And that is exactly what we did here, right? And then the difference between net income and then regular dividend is the transfer to retained earnings. And then you can see here, we put diluted weighted average number of shares. And then here, stock price. And then for the stock price, we need to know the, closing date of the financial statement for Apple Incorporation. We can get it from Yahoo Finance. Now here, Yahoo Finance, this is Yahoo Finance. From there, check their financial tab, and you can see the closing date of the Apple Incorporation financial statement is 9/30/2021. That means September 30. Now our price should be close to this closing date every single year. So that is exactly what we did here. Say for this 140, let us check Apple Incorporation price. Now you can see for 2017, the price which is close to the closing date is 10/1/2017. The same way for 2018, we get our stock price. The same way we get stock price for 2019, 2020, 2021. and you want to get the closing price. So you can see I copied all of those price to our base scenario page. Then you are going to get your market value by multiplying diluted weighted average shares outstanding and stock price. So this is how you get your total market value of the company. Now we are going to copy our balance sheet information, and then here you can see we're going to start with current assets, and again we are going to highlight the financial accounts we want to import to our balance sheet template. So here, let us see, we are going to cover total asset and we're going to calculate that, right? So you want to find out the sub items of the total assets. So just ignore this, check the sub items. So the sub item here is total current assets. And again, we are going to calculate total current assets based on the sub items of the total current assets. So again, ignore it and go down. And then here, the first sub item of the total current assets is cash and cash equivalent, then inventories, and then receivables, and then other current assets. So here in our template, as you can see, we have a specific space for cash, inventories, and receivables. You want to get those individually, and then you want to add up the remaining current assets accounts under this other current assets account. So here you can see we have two accounts for other current besides cash, inventories, and accounts receivables. They are other current assets and deferred tax accounts. So we are going to add them together to get our other current assets. All right. So now you can see under total current asset, we have cash, inventories, trade, receivables, other current assets, deferred tax assets. So these are the sub items of the other current assets, total current assets. So as long as we cover those, the sum of those accounts should be equal to total current assets. And that is exactly we have here. All right. Now let us move to non-current assets. So for non-current assets, we are going to specifically find out information for net PPE, long-term investment, and then other non-current assets. So accounts beside net PPE and long-term investment in the non-current asset side should be summed up to get our other non-current assets. So here you can see our net PPE we have here. So we want it. And then we want our total long-term investment. And then we want the other, accounts right under total non-current assets. So get those to fill up the information for the total non-current assets. So you can see here, we just imported those to the non-current assets section here. To get other non-current assets, we summed up here. You should sum up the other accounts beside total long-term investment net PPE under non-current assets. Let me check the account here. So here you can see this one is empty, but this is one of the accounts right under this one. Let me check what I added here. Here equals sum of these two accounts. divided by 1 million. So the reason we are getting 0 because some problems in decoding these two. We want it to be number. Let me see what we get here. This plus this. This is working. It should work. Equal. Let me see. Balance sheet. So this plus this. Okay. It is now working. Then divide by 1, 2, 3, 1, 2, 3. Right? So you can see here, we just added other remaining accounts beside net PPE and long-term investment to get our other non-current assets. Right. So the sum of total current assets and total non-current assets will provide you total assets. Now we are going to collect information for current liabilities, long-term liabilities, and then shareholders' equity. And we're going to get all of those information from the balance sheet. Now you can see we are going to calculate total liabilities by ourselves. So we don't want this data. And then we are going to move to total current liabilities. And then we're going to again calculate them based on these sub items under total current liabilities. So let us find out the sub items of total current liabilities. You can see accounts payables. And then if we just go down, financial liabilities. Then deferred liabilities, other current liabilities, and then provision current. So this is how you get your total current liabilities. Okay. Now payables is very straightforward. We're going to just copy it. As you can see, we just copied it here. Then current debt. This should be only short-term debt. Now here, this is our current debt. And then we get it from the financial liabilities account. So we are going to ignore financial liabilities because we are considering sub items of the financial liabilities. And then current the sub item of financial liabilities include current debt and capital lease obligation. So we are going to still ignore it because we want to check the sub items right under it, and that include current debt and then current portion of the long-term debt. Now you can see. So as long as you cover these two accounts, you are covering current debt and capital lease obligation. As long as you cover this particular account, you are covering financial liabilities. So you see the sequence here. So we are going to only consider short-term debt right under our current liabilities. And we are going to add up the current portion of the long-term debt to the actual long-term debt. We are going to report under long-term liabilities. So you are going to just copy it to your balance sheet, as you can see here. Now we are going to just add up the remaining current liabilities accounts to get other current liabilities. And then in this case, we have other current liabilities and provision current. So you need to actually add up those to get your total other current liabilities. And then you can see here one important thing to remember. You can see here provision current, that is empty, but if it remains empty and then you just add them up, just to show you, if you just add them up, you are gonna get an error sign. So to just avoid it, just type manually 0 in the blank space. Now you can see you get the number if you sum it up. All right. Now next we are going to collect our long-term liabilities accounts. So we're going to calculate our long-term liabilities by ourselves. We are going to ignore it. Then we are going to just find out the sub items under long-term liabilities. So here you can see we have financial liabilities long term, we want to go deeper into it. So you can see the sub-item of the financial liabilities include long-term debt and capital lease obligation. So we're going to stop here. We're going to collect it. But to this account, we are going to also add current portion of the long-term debt to get our total long-term debt we report in our template balance sheet, as you can see here. Then we are going to add up the remaining non-current liabilities account to get other long-term liabilities. So here you can see right under total long-term liabilities, we have payables and accrued expenses, we have other non-current liabilities, we have tax liabilities, we have deferred liabilities, non-current. So you're going to add all of them up to get our total non-current liabilities. Now we are going to calculate our total equity, and we're going to calculate our total equity based on paid up capital, retained earnings, and then others. So let us do so. So you can see we copy paid up capital, retained earnings, then we also copy other equity accounts. So it should be all the accounts except paid in capital and retained earnings right under shareholders equity. So you can see here total equity, it has one sub account which is equity attributable to parent shareholders. And then if you go down, we have paid in capital, so you want to get it, and then another one is retained earnings, and then whatever other accounts we have, you need to add them up together to get your total equity. So as long as you cover it, you're covering everything from total equity. And then be mindful if the total equity includes any account under equity attributable to subsidiary shareholders or to minority shareholders. In that case, add it to the other other account we have right under other equity accounts we have right under shareholders equity account. All right. Now this is how you're going to complete your balance sheet. And then in the next step, we are going to calculate some ratios, and then we're going to forecast those same ratios in the future years. And then we are going to apply it to calculate the free cash flow to the firm in the future years. And then we're going to use those forecasted free cash flow to the firm to get the intrinsic share price. We're going to do it in our next video. Thank you.